You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options. Facebook.com/TheOptionsInsider or via questions at TheOptionsInsider.com.
Welcome to Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by MIAX, one of the fastest options platforms in the world. MIAX is now trading options on the SPIKES Volatility Index, offering pinpoint accuracy, radically faster dissemination, and a highly transparent settlement auction for confident trading, all for competitive exchange fees. It's time to make a change and give yourself an edge with SPIKES. Learn more about SPIKES at www.miaxoptions.com/spikes. Options involve risk and are not suitable for all investors. The statements made are provided for information purposes only and are not intended to provide and should not be relied on for financial or legal advice. And now, it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
Welcome back to Volatility Views, the premier program for volatility traders. My name is Mark Longo from the brand spanking new TheOptionsInsider.com. Hopefully you had a chance to check it out lately. A lot of great shows up there, a lot of great content articles, all the fun stuff you like, plus a whole lot more. Check it out, the new TheOptionsInsider.com. Let us know what you think. We love to hear from you guys. Of course, we're coming at you live here on Friday, the 14th of June. Hard to believe we're almost halfway through June already. This year is flying by here, and usually we're into the summer doldrums by now, but this time, not so much. Still some stuff popping off, some fun stuff to talk about in the volatility space. We got a great crew assembled to help me do just that. Starting out, let's go out to the global headquarters of Carmen Line Capital /Option Pit, where we are joined by the greasiest of meatballs himself, Mr. Mark Sebastian. Mr. Meatball, welcome back to the program, sir.
Well, I don't know if Delaplane Street, where I'm walking my dog, is the global headquarters, but I'll take it. It's a beautiful day outside. Kind of some weird price action in vol, and I'm looking forward to talking about it. And a little bird told me there may have been a pretty decent-sized trade in spikes that we get to talk about today.
Yes, that little bird has been making the rounds. He's a pretty big bird, as it turns out. We're going to get to all of that in a little bit. Helping us break all this down, our old friend holding down the MIAX hot seat this week, Mr. Shelley Brown, the Executive VP over there at MIAX Options. Shelley, welcome back to the show. It's an audio show, so I can't see you, but I'm going to go out on a limb and guess you got a big smile on your face this week, sir.
I do, Mark. Things are going really well. Thanks for having me on the show today.
And last but not least, we are also joined. It's about time we got him back, and there's enough good stuff going on this week to wake him up bright and early over there in sunny Sydney, where he is, I think 7 days behind us is the technical calculation. Mr. Simon Ho, the CEO over there at T3 Index and the father of spikes. Simon, welcome back to the show, bleary-eyed but ready to roll, sir.
Oh, look, I love that title, so I'm raring and ready to go.
Well, no, Mark, I believe it's actually Saturday there, which would make sense because Simon, his brain and all of his concepts are so futuristic.
Yes, he's
that
the
they
man.
literally have to come from tomorrow.
He's the man from the future. That's true. I like that. Simon, the man from the future. That's good stuff. If I sound a little bit different, listeners, it's because I'm coming at you from the southern studio here, not from Chicago, which is also why if you're listening live, you're going to hear it the old school way, which is straight into the segments, the transitions, everything else, music, all cut in later. If you're listening after the fact, then don't pay attention because it's already good to go. As we keep on rolling right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, everybody, welcome to the Volatility Review. This is indeed the portion of the program where we break down the week that was and indeed still is on the volatility trading and trending and analysis and all sorts of other fun perspectives. It's an interesting week. You know, we were talking the last couple of weeks about this ever-flowing back and forth from the trade war premium. It's in, it's out, it's in, it's out, vol is in, vol is out. We've seen kind of a bit of a similar pattern where we see a nice spike, usually off some sort of aberrant tweet, or maybe it's an escalation of the trade war to a new country like Mexico. Then the saber rattling kind of rescinds a bit. Maybe Mexico backs off the table, and all of a sudden vol comes in. We've seen that pattern play out a few times now. We spike, we come back off. We spike, we come back off. And then spike, pun intended. I like that. And then this last week or so, it's been kind of interesting. We were kind of remarking on the show last week. Obviously, the term structure in VIX futures is still very flat. Some may say spookily or eerily flat. And we've seen volatility kind of hovering in this range, which let me just say here at the top of the show, some prescient fellow, I don't know who, some prescient fellow, he predicted about a 1575 in the VIX and in the spikes, and coming into showtime, we were at a 1571. I call that a bullseye, Mr. Meatball. I'm taking my victory now. I've learned my lesson over the years. So I'm calling that a bullseye. I'll actually, it just ticked up. I'm 0.03 away now. So that's within our 0.10 window. My 1575, looking good. I'll stamp my victory now. I'll just take my laurels at the end of the show, but I'll just collect my victory winnings right now, listeners. So there you go, listeners. A victory off the top of the show. Good way to kick things off. But we are still kind of in this range, and that's kind of what I predicted last week. We're kind of glued around this 16 handle for the most part. VIX Cash at about a 1575, and coming into showtime, we're seeing MIAX spikes at about a 1563. So both of them kind of hovering a little bit below, a little bit above this 16 handle, but that seems to be where we're kind of locked for the foreseeable future as everyone's waiting for the next shoe to drop. Mr. Meatball, do you concur we're kind of playing this 16 dance until we learn something more in the marketplace?
You know, the price action of vol has been really weird. It backs off on down days and seems to get strong on rallies. And it tells me that the market is really choppy right now, really kind of not unsure of itself, not sure where it wants to go. But it does not feel like, you know, there's any sort of imminent danger. You know, I think one of the reasons why vol held up so well is that leading up to Tuesday, we'd run 155 points in 5 days. That is good for a whopping 17.5% volatility. So you get spikes in VIX trading around 16. They're actually at a discount over that time period. For a little bit, if you look at 10-day and 20-day realized vol, they're actually running hot on VIX and spikes. And now that we've had, you know, we'll call it 3-4 days of little movement, and now what seems to be a budding certainty around what the result of the June meeting is going to look like, and some belief that if there is a trade war, if things go bad at G20, the Fed is there to drop the Powell put. I guess it's now called a Powell put, to drop a Powell put on the market and drop rates. So, you know, as a whole, I think that we're seeing the kind of price action that says the market may not do very much, and vol is probably this kind of 16 VIX feels like it's and 16 spikes kind of feel like they're on their last leg, like they're ready to die. But you know, that's just kind of the way the price action has been. Usually when you see kind of vol falling back on sell-offs, it's a sign that hey, you know, the gig is up. And so if it's not next week, it'll be the following week where we'll be talking about a 12-13 VIX, I think.
Yeah, it used to be the Bernanke put. Then for a brief period, it was a Trump put. Now I guess it's the Powell put, right? Everyone gets their own put time in the sun, apparently, out here in the marketplace out here. Well, Simon, it has been a while, you know, since you've been on the show. So maybe let's catch us up. What's been catching your eye out? I know we'll get to all that good big stuff in a little bit when we get to some of the trades that have been lighting it up this week. But in general, do you kind of agree with that assessment? We've been kind of locked around these levels in vol for a little while now. Do you concur with that? You think maybe the other shoe's about to drop, are going to start moving, or do you think maybe we're just stuck in the 16 vortex for the foreseeable future?
Yeah, no, I kind of agree with Meatball, because I think that so far, this year at least, realized vol has been lower this year than it was for last year. So it's been around 13%, whereas last year is kind of closer to 17%. And I think that given the confluence of things that are coming up, like OPEC meetings, you've got a G20 and obviously the Fed, I think the inclination here is for that premium to sort of dissipate at some point. So it's been stubbornly bid there. And, for example, we have been feeling, our model has been forecasting that volatility will go lower, but it really hasn't done that. It's been pretty sticky at these current sort of levels. So, yeah, I agree with that synopsis, that I think that the likely course for us here, subsequent or absent any sort of major catalyst, I think we'll have to see volatility come off a little bit.
And Shelley, before we get to the elephant in the room, sir, just in general, anything catching your eye about the volatility space this week before we start rolling on into some activity and all that fun stuff?
Yeah, other than seeing continuing tightening in our markets and spikes, I haven't paid a whole lot of attention. As you said, there's some trades we can talk about, but I'm running the exchange. I'm not paying as close attention to the vol market as you guys are. Sorry.
That's what the Vol View show is for, Shelley. We catch you up once a week. That's our job here.
Thank you.
on the show. All right, let's move. Let's keep on rolling.
Like his volatility cup of coffee.
Yes, exactly. Exactly. You wake up, 3 a.m. in Sydney time. You get a cup of coffee, you do some vol views. That's how you wake up over there. Moving on to the broad vol market, like we said, vol has kind of been sticky. VVIX also appropriately sticky. It was at about an 84.5 a week ago on Showtime. Coming into this show at about an 84.5 again. So it's pretty much stuck. We're stuck in this time infinite loop. Although if you believe Mr. Meatball and perhaps Mr. Simon, the man from the future, maybe perhaps not for so much longer. Looking out here to the futures curve, we've been talking about this for a while, just kind of how eerily, spookily, strangely flat it is, and that's still pretty much the case. There's a nice little slope at the front portion of the curve, as you kind of would expect, about a half a point premium from that front June contract to the cash, and about a little more than a point, about 1.3 points for the 2 months out, the July contract out to the cash, and then the flatness just kicks in. In fact, if you go out to AUG, it's about a 17 and a quarter, which is almost exactly pretty much what they're pricing in for DEES. So there's literally no premium between AUG and DEES here on the VIX futures curve, which should tell you that still kind of the market is still kind of playing this coin flip kind of scenario, which is, we've been remarking on it for a while. Maybe it will change in the near future. Maybe we'll be discussing this exact same structure here next week. We've said many times, the answer to all volatility questions lurk somewhere in that VIX futures curve, and we'll see what answers. Right now, it's kind of giving us a big shoulder shrug. I don't think they know what the answer is out there.
It's begging for the curve is begging for a steepener trade, which is what I would be looking to do here. And I'm kind of interested to talk about the price action we've had when we get there, because we've really seen. What's interesting is you've kind of seen vol of VIX and spikes backing off at the same time a firm SPX, which tells you. And when I look at the paper in VIX, all I've seen is call selling. And then I talked to Leisha, my director of operations. Her husband is a market maker in the SPX pit, and he's saying we see put buyers, 20 and 30 and 40 delta put buyers. So what we've got is they want gamma, they don't want vega, which is really interesting, and tells you that they don't see, for vega to work, you need a real event. For gamma to work, you just need some movement. So the market's after movement and not after, call it outlier event protection.
Speaking of outlier events, I don't think it was an outlier event. Let's see if we can talk about it and see what more we have lurking in the future. This is usually the part of the show where we kind of dive into what's going on in spikes, and there's been some size, there's been some rolls, been some 50 lots here or there, things like that, but we've been talking for a while. People are waiting for the future. This week was the future, listeners. A big size print here. Orders of magnitude more OI to talk about this week than there was last week. Maybe, Shelly, we'll start with you. Walk us through this massive ratio vertical you had go up. How did this happen? How did this all come to pass, sir?
A member firm entered an order into our what we call our complex prime mechanism. It's the crossing/price improvement mechanism to trade the August 18, 26 2x1. Did it 5,000 times. Crossed a big chunk of it. There was a market maker that responded and traded part of it, and trade went up, like I said, 5,000 by 10,000.
Yeah, it is funny that what was that?
It was done on Wednesday.
It is funny that the first big institutional print in spikes is pretty much the trade du jour in the vol space, right? We see this go up in VIX options all the time, which is the 1x2. It's kind of everyone's favorite print. So I guess it's somewhat appropriate that the first massive print to go up in spikes is this trade. You're right. It was the AUG 1826 1x2, 5,000 of the AUG 18 calls versus 10,000 of the AUG 26 calls, bringing our OI up to a whopping 16,000 out there in OI. I believe it was the Exchange Financial Access folks who put up this, or helped facilitate at least this first large block. We got some color from our buddy here, Mr. Schwartz, the Flow Master, who was writing this trade up. He's saying what they call it, the AUG 18s went up for $2 for 5,000 times against 10,000 of the AUG 26s for 75 cents. So 1x2 doing that for 50 cents net on the credit side. Interesting stuff. Simon, I know this was enough to get you out of your bed all the way out there in Sydney. Walk us through this trade, what you thought about it. And do you also agree that it is somewhat appropriate that the first massive institutional block we see print and spikes is everyone's favorite, the old 1x2, sir?
Hi. Well, look, of course, I'll do whatever I need to get on this show. And I'm happy to say that I got into my DeLorean and I went to the future and figured out what would happen. And so, this was no surprise. Seriously, it's been something that's sort of the MIAX and us sort of been working on for quite some time. So it was really good to see it come to fruition. I think, as you say, it is very apt that it was this particular type of trade. So it happened that there was also a VIX leg on this thing as well for this particular client. So we expect more of this to come into the future. That's what we're expecting over time. Over the next few months, you should see sort of significantly more of this coming in. And I reckon it's a good way to start because, ultimately this thing doesn't have a whole lot of much, right? It doesn't have a whole lot of gamma or delta stuff to worry about. Obviously, with the fact that we have futures coming, that's going to be a really massive addition to this. Obviously, it makes life a lot easier for everyone who is managing the risk of such a portfolio through time. But yeah, I think we were really very impressed with how it went down at MIAX. There were seemingly lots of people wanting to be involved too, which was, a real big surprise and slightly to the upside for me because, like I said, there are some challenges with not having a future just yet, but we're closing in on that, and that should materially change things. But very excited about this particular trade. It was great.
Yeah, you mentioned.
I'm assuming the customer was buying two, right, Mark? He was buying two and selling one.
I haven't looked into it, but I'm pretty certain that's what they would want. That's what I would want. I wouldn't want it the other way.
Yeah, no, that's a little wider than I'm used to seeing, right? Normally it's about five or six. This one was 8. So they're looking for a bigger move, but they also collected a bigger credit. So, it's a really kind of interesting trade, I have to say.
Yeah, we talk about the structure of these many times, and you're right. We typically around 5 handles seems to be kind of the sweet spot, but at least this isn't like we've seen them 20, we've seen them 25 handles wide. So this is not the most egregious here. What was it? 18 26. Yeah, so eight handles. That's not the craziest.
I was a little disappointed it wasn't like a 1640 1x7.
Get the outlandish paper out of the way now.
35,000. Yeah, Shelly was actually hoping for that too. He said, hey, why instead of 1x2, why don't you do 1x10 and you do the 40 strike, but and you'll get a nice credit. The customer was like,
he wants the customer to come back and not blow out on the first trade. I think that's the goal.
I know. I'm kidding. Shelly would never make that. I'm just busting Shelly's chops.
But Simon, since you are the man from the future, you kind of mentioned the future. The narrative of this discussion we've been having for a while is a lot of the big institutional players have been waiting for that future. It certainly is easier to put up one of these trades tied to the future, right? You mentioned there was a VIX leg to this. Was that what kind of eased their way into this? How'd you get the institution to put up this much size without really a futures leg there that they could lean on?
Yeah, that's a very good question. So yes, I think that having that VIX leg certainly had to help because you have both of them on, but this is a roll, so the maturities don't exactly match. They're sort of 1 month apart, but nevertheless, the fact is that you're going to have a portfolio of one long package versus the short package on the same amount. So that's something I think that contributes. But certainly, yeah, we're very cognizant that we need something else there for people to be able to hedge, and so we're also working on tide trades. Now, tide trades is probably going to be a little bit quicker than the future. Naturally, there's a bit more involved with doing the future. So, but both of them are progressing nicely, and hopefully tide trades will be along soon enough. In which case, it'll be much easier for people to be able to manage the risk of spiked positions going forward.
Yeah, I mean that's what they do. When they tie a VIX trade to futures in the pit, all they trade is combos. They don't actually even trade. Yeah, they don't even trade the actual future. Brokers like it because when I think I'm buying 4 futures, I'm buying 80 contracts from them, so so they get to bill me an extra $100.
Yeah, the brokers love the combos. I don't know if the market makers always love them. So Simon, are you telling me that this is a customer that had an existing position in like July VIX back spread, rolled out of his VIX trade and into a spikes trade?
Yeah,
that's what the trade was?
Mm-hmm.
All right. Well, that's even more interesting. You had a customer actually it's like you had a customer that was a Chevy driver just switched to Ford or I don't know, what kind of cars do they sell in Australia?
Porsche.
Porsche.
There you go. Everyone drives a Porsche in Australia.
Peugeot.
But it is kind of interesting though, right? Seeing open interest start to migrate, that's kind of interesting. And I think there's a bit of that false narrative out there too. I think when this product first got out there, all the ink, all the coverage was, VIX competitor. It's a new entrance to the vol space, but there's still, and you're moving open interest, which is good. But on the flip side, there's also there's a leg of it hedging in VIX, which it means so this kind of trade is kind of accreting to everybody at the end of the day, which, all these vol products, they all trade off each other anyway. So there's going to be a lot of paper flowing back and forth, which I think is what everybody is looking forward to seeing, arbing, legging against. And I'm looking at, this is exciting seeing this. I mean, this is not a 500 by 1,000. This is a pretty sizable trade. So I'm excited about this. Shelly, are you getting the inkling out there doing, your road show, talking to the institutional friends that this is the first of many on the future, sir?
I do. In fact, the phone was ringing off the hook Wednesday afternoon for firms. One wanted to know what information we could share, which of course we can't share anything about who our customers are. Or we don't know who their customers are. But more interest in what can we do to get involved in the auctions, and how do the fees work, and just interest from firms that hadn't been asking questions before. All of a sudden, they're interested.
Apparently, there's a dog interested in VIX there too, Mr. Sebastian. Is that your dog? Is that excited about VIX? Is that what I'm hearing?
No, it's some small yippy dog that we're walking by in the background.
Just give him a little kick and say, "Hey, we're doing vol views now, dog."
No. I know. I'm trying to tell. Hey, I'm on a podcast, dog.
Dog,
shut your mouth.
Doesn't the dog get that? But, it has...
No, my dog doesn't bark.
There you go. A smart dog. He's been beaten into submission, sir. Well done. I'm joking, of course. Listen, before we get all the angry email, I do not condone abusing animals. All right, let's keep on rolling here.
Don't.
The size paper of the week, obviously that spikes trade. Some other stuff going on out there in VIX land as well. Kind of actually a light day. In fact, kind of a light week. About 180, almost 200,000 contracts on the tape in VIX options land coming into showtime. The ADV was pushing 700,000. Now it's come off quite a bit. Again, kind of speaking to how we've kind of been glued at this level for the better part of the past week, and there hasn't been a lot of paper going on with that. So ADV shy of 500,000 now, about 482,000 contracts, down about 200,000 from last year. That's a big move in ADV in just a span of a week. So interesting stuff out here. In terms of what people are up to out there in VIX options land, the top 10 hot VIX options are out there right now. Let's start at the bottom of our top 10. We start off number 10, the June 26s, 137,000. Number 9, hot on its heels, the June 20s, $1.39 open there. Number 8, the AUG 37 halves. We go back to our old friend, the 37 halves, with 149,000 open there. Number 7, the June 37 half. So we talked about some paper on both of those strikes last week. That's still out there. 160,000 of the June 37 halves. Number 6, June 22 is $1.63 on the tape. Number 5, the June 30s, the ever popular June 30s. I'm waiting for the Spikes 30s to light it up because the 30 strike seems to capture the imagination for everybody out there. 171,000 of the June 30s breaking into our top 5 this week. Number 4, the June 14 puts, $1.82 on the list. Number 3, the June 16 puts. Nice little put strip here on the top. 196,000 of those. Number 2, the June 15 puts. 224,000. And rounding out our top 10, number 1 this week, 310,000 of the June 25 calls. Total OI, about 8 million, about 6 million on the calls, about 2 million on the puts. Again, that OI has come off quite a bit as well, as you could see from the number 1 position being only 310,000. Usually we see 400 plus thousand for that type of level. In terms of the size prints going up this week, I mentioned verticals are popular, ratio verticals are popular. That's the case out there in VIX land as well. The big print out there today was pretty much not quite 1 by 2, 1 by 1.5 of the July 30-35s vertical, going up 10,000 by 15,000 times, doing it. Looks like, I guess that's probably why they did 1.5, was 22 cents by 14 cents. So pretty much premium neutral at that level of 1 by 1.5. So it looks like a little bit of a flyer. Let's see how this went up. They went up 22 cents and then 14 cents. So looks, it kind of split the uprights here exactly. Also saw a couple 1,000 lot condors going up here today in VIX land. The June 2021, 22, 23 call condor going up pretty much for even money, and then 1,000 times, as well as the June 2021, same one, it went up 2,000 times, looks like total, with 4 legs there. So a few contracts worth of love out there. Yesterday, Thursday out there in VIX land was kind of, looks like it was risk reversal day. We saw the June 1721 risk reversal going up 2480 by 12,000 times. For a net of $1.32 on the bid for that one. So it looks like paper selling that risk reversal, again, on a funky ratio, not quite almost 1 by 4 pretty much. Also saw the June, what do we got here? 16, what's going on with my notes here? They're going crazy. We had lots of risk reversals going up there. Yes, there we go. AUG 1723 risk reversal going up 1,300 by 5,000 times for $1.12, and the June 1721 going up 930 by weird prints 4,500 times also for $1.32. So funky risk reversals. The order of the day on Thursday. Wednesday we saw big prints in the downside puts. Not that downside anymore, but close. June 15 puts going up for 20 cents, 30,000 times on the bid. This print went up late though. They were 20 cents at 25, so hitting the bid. It wasn't opening, so maybe someone getting the heck out of Dodge on these puts. Again, the late print makes it a little hard to read the tea leaves on that one. Also saw the July 22s going up on the bid about 12,500 times for 52 cents there, as well as SEP 30s. This 30 strike still capturing the imagination. 10,000 of those going up for exactly mid-market, 55 cents over there on Wednesday as well. So going out to Tuesday, the size paper out there, one of the sizer, easier for me to say, one of the larger puts. I'm not prints. I'm making up words as I go here today, listeners. Been talking all week. One of the larger prints on the week here looks like 11,000 by 22,000 of a size put 1 by 2. Looks like paper buying this one. It was the June 16 puts going up for 62 cents, 11,000 times versus 22,000 of the June 14 halves going up for 11 cents. So doing the whole thing for pretty much 40 cents, a 1 by 2. Mr. Meatballs, how does that one float your boat? The June 16 14 half 1 by 2 for 40 cents. Does that one float your boat? And any other VIX paper lighten up your tape this week, sir?
You know, you see a lot of these 1 by 2s trade when we, the way we've been trading lately, like 16, 14, 16, 14 and a half, long 1, short 2, short 3 has worked. I mean, it has been like clockwork, those things. One of these days, there's going to be a sharp drop in futures, and that is going to be a problem for the 1 by 2 holder. But that has been interesting. I'll tell you what I'm seeing is call selling. Today there was a September call buyer, but most of the week, AUG 23s for sale, July 25s, June 19s. I mean, you name it, they wanted to sell it, which gets back to our theme. They do not seem to. I did see a big 1 by 1.5 go up today, actually, in July. But really, nobody is afraid of the VIX blowing up to 30 right now. They're more interested in hedging the S&P dropping to 2750. There's almost no appetite for upside. I have seen some put spread sellers as well, which again shows you that they're betting on some ranginess. With maybe a little bit of a bias toward maybe dropping a little bit. But the paper is really, really unusual. They're out to collect and harvest premium in the volatility complex, which, we really hadn't seen till the last, 3 weeks.
Speaking of appetite for spikes to 30, pun intended there. I left off the actual size, I think, print of the week was on Monday, and looks like a roll on the 30 strike. So the aforementioned beloved 30 strike still getting popular. 30,700 of the June 30s going up for 4 cents, so finding a bid on those somehow. And then looks like rolling those out to July. Just going out a month for 25 cents, so doing the whole thing for 21 cents there. 30,700 times there. So someone out there is continued fascination with this 30 strike to the tune of keeping that strike alive for nearly 31,000 contracts. We shall see. Not opening on either because, again, the 30 strike size OI on both of these. So, but I'm going to go out on a limb and say this is probably a roll keeping that love alive. Simon, I know you've been busy just talking about really and looking at size prints out there in Spikes land, but anything catching your eye in the vol market this week outside of that big Spikes print that really worthy of note, sir?
Not specifically. No, I've just been more kind of along the lines with Meatball that I think that it's been stubbornly bid, VIX and Spikes. And I think that we've got a very interesting week coming up, period coming up with OPEC and the Fed and whatnot and the G20. So my impression, nothing specific, but overall, I do think that the curve will probably steepen, and that's obviously going to be led by the front going down. It seems rich to me a bit.
Yeah, I'm surprised we're not seeing more curve steepening trades, or like an AUG SEP 20 put spread or something like that, buying AUG, selling SEP. I think for a small credit, to me, looks really appetizing. I'm not sure why nobody's jumped on board with this. If they wait much longer, I'm going to do it myself.
Is that what your friends, the Thompson twins, are up to right now? Are they trying to steepen that curve a little bit?
No, I don't know what they're up to, but I they're busy. They're always trading. We're short VXX, long UVXY, short VXZ, and long ZIV, and it's or whatever. They'll have some weird combo on. So they got the mullet, the Tulum, and then I believe they have one called the bad haircut, and I don't know if they have that one on right now, but it kind of looks like the alfalfa, their position, if you will.
I didn't know they're still doing a lot of UVXY out there. I guess they're the ones.
I don't know. I have no idea. I'm making this up, but I saw them last week, and they did a good job at our event. Had some drinks with them, and we need to get them on. But I'd love to talk. Some sort of curve steepener needs to be executed because it is just completely jacked.
Well, you mentioned our old friend VXX, the product that we rechristened ourselves here on the show, listeners. So pat yourselves on the back for that. Your market power was felt when they dropped that horrible B off the end of this name. But let's look here and see what's lighting it up out here in VXX this week. VXX, kind of the similar narrative that we've seen for the rest of the vol space, kind of stuck where it has been. We were talking about the 30 strike. We broke through it again last week. Then we've kind of been hovering. It was at 28 last week. Coming into showtime, we were at about a 27.70 in VXX. So go figure. If VIX is not going anywhere, probably VXX not going anywhere either, at least in the near term. Volume today, kind of light, about 131,000 contracts. ADV right around 270 out there. Let's see really quickly what the top positions are out there in VXX land as well. Yeah, number 10, top 10 here. June 39s, talked about those before. 33,000 of those bad boys. Number 8 are the June, what we got? June 22 puts here for 34,000, also 34,000, a little bit more, slightly more, 11 more contracts for number 8 of the June 25 puts. Talked about those last week. Looks like a bit of some vertical trading going on there. Number 7, the June 80s. Love those. Ever optimistic. 35, almost 36,000 of those still open out there. Number 6, the July 42s, comparatively far less optimistic, but still very optimistic. July 42s, 36, almost 37,000 of those. Number 5, the June 23 puts, about 38,000 open there. Number 4, back to the upside in June. June 45 calls, 40,000 open there. Number 3, the June 50s. 46, almost 47,000 open there. Number 2, our final put on the list, the June 24s, and number 1, still with the bullet out here in VXX. We talked about it before, the persistence of upside in VXX. That continues to be the case. Nearly 60,000, 59,000 and change of the June 40 calls dominating the open interest out here in VXX land. Total OI of not quite 2 million, about 1.9 million, about 1.1 of the calls, and about 824,000. So even on the total OI, calls still leading the dance. Does that surprise you? It's kind of interesting, and we're seeing that going up today as well. The big trade out there in VXX land today, actually a pretty big trade for VXX, 20,000, almost 21,000 of the June 50 calls going up yet again. This time looks like they were offered at 2 cents. Someone gobbled up that offer nearly 21,000 times. Not opening, so it could be some closing action going on here, but they got themselves a tight market and they took advantage of it for almost 21,000 contracts. And also the other big trade today, 5,000 of the July 35s. Mark, sounds like you're blowing off down the street, sir. Are you alive there, sir?
I thought I was muted. Sorry about that.
Are you in a hurricane? Is there a hurricane in Riverside?
No. We just got a nice, relaxing breeze here in the summer sun. You know, the summer winds came blowing in across Riverside.
I'm down here in the southern studio, and I can see the dark skies coming in. So we may be getting some sort of hurricane force winds pretty soon. But it is that time of day down here. Not.
Yeah, VXX, it will always have call buyers. I don't know why, but they always will. And, I have seen pretty decent back and forth. That's another name where they love those bear 1x2s, long the 27, short the 25s, things like that. But, again, it's softening as the day progresses. The VIX is softening, the spikes is softening, and we got the market down, the spikes down, and the VIX down. About the only thing that's actually up is bonds and gold. I know I'm sure we'll have a spike gold product at some point, but for now the GVZ, the VIX of gold, is back up over. It's getting frothy. It's making a run at 12. And, after precious metal vol had been absolutely in the toilet for 2 years. Same thing with bond vol. I'm really interested to see CBOE's talking about launching the TY VIX future back. I told them what they should do is, and maybe Spike guys, perk up your ears here. You need to have what is the Eurodollar is going to start trading? The Eurodollar options are going to start trading on Euribor, not LIBOR, pretty soon, right? What I was saying is,
yes.
You got the Eurodollars trade. You think SPX is busy? Go to the Eurodollar pit over on the Merc. Why is nobody trading a Eurodollar volatility future? Huh? Simon, you hearing me? Eurodollar vol.
There you go. Simon, you're getting homework. Every time you come on the show, you get homework for new products, sir.
You don't think that would get some action? You don't think something like that would get some action? A Eurodollar?
We talk future? Eurodollar on.
I guarantee you it would.
We talk Eurodollar on TWIFO a lot. And that one is, that's a product that's kind of daunting. I mean, I'm a former SPX guy, and even still, seeing the numbers that go up out there in Eurodollars, it's kind of mind-boggling. The size paper that goes up out there, it's a whole other level.
And you don't think that there would be some appetite for those guys be able to manage their vol positions? Yeah, heck yeah, there would. You heard me, my ex. You heard me.
There you go.
Simon Ho.
New product alert here, coming soon. The Eurodollars.
I get a piece of this product when you guys develop it, just an FYI.
Or maybe they'll do the Ameribor. Maybe they'll do the Ameribor version. There we go.
Yeah, the Ameribor is what the Eurodollar is gonna basically be instead of LIBOR, because they're getting rid of LIBOR, although all I want is call it a 12% royalty on all fees collected going forward when you guys develop the product.
Speaking of royalties,
Mark, I'll throw you. Yeah, 2% is going to go to Mark though, so it's really I'm only asking for paltry 10.
There you go. I'll take 8. He'll take a nice. We'll work it out. We'll work it out post show here how it all breaks down. Speaking of royalties, really quickly, someone found themselves just like a nice little juicy royalty on VXX. Before we roll off this one really quick, someone, Mr. Meatball, this Wednesday, and Simon found a 20-cent bid for the June 15 puts, and they crushed it to the tune of 30,000 times. Someone took 20 cents. Someone found a 20-cent bid for 30,000. 15 puts, listeners, expiring next week. These are about a week to go when this trade went up. It went up on a Wednesday. So can you?
And they were a happy seller.
I would think so. I think you got a lot you could do between now and 15.
Yeah, no, I saw that order. I was at the initial market was 16.22. I joined the 16 bid for some size. I'm glad I didn't get filled because I'm losing. I would be losing.
You wanted that? You wanted those for 16 cents?
For 16 cents, the June 15's expiring on Wednesday. I don't think that's a terrible shot. You buy 1,000 of those, you're betting 16 grand that we get some sort of push lower this week, or Monday. Wednesday, if you paid 16 cents for the 15 puts and the S&P 500 was, or the VIX goes to, 15 and a quarter, you're going to double your money. But if that was where it was today, if we were at 15 and a quarter in VIX, or 15 or 14.75, those would be worth 35 cents. Instead, they're worth nothing. I don't know, Simon. What do you think?
Wow, it seems a bit short term to me. I don't typically trade sort of such short dated stuff, but yeah. No opinion. I'm flummoxed. I don't know what I would do there.
Yeah, on Wednesday, 16 cents for the 15 puts with the VIX at 16.
Oh, you know what?
It seems not like a bad deal.
I'm more with you. When this first went up in our notes, they put it up under VX. I thought someone hit the VXX 15 puts for 20 cents. I said, oh my God, that's completely free money. But these are VIX. That makes a heck of a. I like your way a lot better than. I thought you were an insane person for a second there, Mr. Meatball. I was like, why in God's name would you buy these in VXX? Okay, that VIX. Print makes more sense. I like it the other way better. That's free money then. 15 puts, 20 cents. I think I could do that a few times. All right.
Yeah, no, I'd be all over that one.
All right, speaking of all over it, you guys are all over us with your questions. It is time to get on into the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the Volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the Vol voicemail. This is indeed the portion of the show where you guys take the reins, your questions, your comments, your pearls of wisdom, all that good stuff. Let's kick things off. Actually, Simon, it's a good thing you're on the show here. Got some questions that are right up your wheelhouse there. I think you're going to like this first two. We got a couple that are kind of in the same vein, so we grouped them together. Elliot asking, it looks like Bitcoin is getting very volatile again. What are you seeing out there right now? Where I'd say, hey, check out our Crypto Rundown show for that. And then GLN09 asking, is there a Bitcoin VIX? Simon, if someone was intrigued by the notion of something in the Bitcoin volatility realm, where should they go? What should they do, sir?
Well, what a great question. I'm glad you asked.
See, you get up early in the morning for a reason out there. You get rewarded.
Well, there you go. So we produce and disseminate via Thomson Reuters the first volatility index on Bitcoin. So yes, absolutely, you can look at it. I think the latest value I saw was 82. So it's up there. It's extremely volatile, as you would expect. We did this in partnership with Akuna, who are a market maker in OTC Bitcoins and obviously Bitcoin options. So obviously you need that. There aren't very many people who do that. So that's why there hasn't really been an index until now. So that's freely available to check out on Thomson Reuters. But yeah,
isn't there some sort of over-the-counter options exchange in like the Netherlands that you can trade these options on?
Oh, there's a bunch. Yeah, there's Deribit that will do. There's BitMEX. Those all require a VPN if you're in the U.S. Or like Simon mentioned, you can call up an OTC desk like Akuna and others. They will make markets for you in the crypto options OTC. There's a surprisingly robust marketplace for that stuff. If you're interested in this, GLN09, I encourage you again, check out our Crypto Rundown program. Check out Simon's many and varied index progeny. On the vol space, he's got quite a few of them out there, including in the Bitcoin side. All right, here.
Hey, Mark. You know what I just was thinking about? We've given Simon an assignment to come up with a Eurodollar vol index, right?
Easy product to make a vol product for.
Yes, you know what we need to do? We need to call it Simon's Quest.
one of the better Castlevania games. I did like that one. Frustratingly complicated, but so are the Eurodollars, and so would making a Eurodollar vol. So I guess it all hooks together there. There you go, Simon.
Is there anything more cryptic than? Yeah, there's nothing more cryptic than Eurodollar.
Yeah, you get to sit down now, Simon, and figure out the reds and the greens and the whites and all that other fun nonsense out there.
That'd be great. They launch it. It goes.
And
no, just kidding.
If you trade it at some point, you have to kneel down next to a cliff and then wait for the tornado to come to pick you up, to take you to the next level of Simon's Quest. All right.
We need to make that Simon's intro music when we're able to get him on the show.
Yeah, I'm sure Konami would license us the Castlevania music for a very reasonable fee.
I'm sure.
Let's see here. We got a bunch of questions. Here's another one. See, Simon, since you get up early, I get to reward you with a bunch of questions that are kind of been hanging around that are right up your alley here. Waterson wants to know, can you explain more about the price dragging method in spikes? How exactly does that prevent what happened to the VIX from happening in spikes? Great show, guys. Well, thank you, Mr. or Mrs. Waterson. Simon, they want to know how does that keep the quote unquote manipulation that they've been accused of in VIX land from going on in spikes, sir?
Well, that was a great question from Waterson. So price dragging is a technique. It's a proprietary technique that we sort of imbued into the index construction itself, designed to sort of ward off that issue that you talked about. Not so much manipulation. It's more that sometimes the index flitters in and out in the face of fast markets. Now, the reason for that is that the volatility indices around the world in general use the bid and the ask, and they take the mid price to work out the value of each constituent option that goes into the index. Now, naturally, you can imagine if a market is really fast, something big happens. Oftentimes, you'll find market makers will either reference both the bid and the ask just because it's too volatile, or typically they'll reference the offer because that's obviously the more risky side for them. So if you don't have an offer, then you can't determine the mid by definition of the constituent option, and therefore the print doesn't work. It's zero. It flatlines. So what we wanted to do was to try and find a way to mitigate that issue. So what we do is we actually preference the last trade price over the bid ask, and only if and until the bid or the offer moves through that last trade price will you then update it to that new price, because that makes sense, right? Because the last trade was, say, 10 cents, but now the bid is, the bid offer is 11 at 13. In this case, that's a real price that's in the market, and it is now higher than the previous traded price, and that then becomes the new reference price. So what that does is it gives the index a great deal of stability. But there's one other thing that was quite interesting, sort of an outgrowth or a byproduct of that, was that we can update the index at extremely high frequency. So we do so at 100 millisecond intervals, and VIX updates every 15 seconds. So we're updating 150 times more frequently as a result of being able to use this price dragging. So hopefully that answers the Waterson question.
There you go, Waterson. Come to VolViews, you get your detailed answer. See, that's why we like our audience. They're all over the place. Speaking of all that stuff and the price dragging and all that fun stuff, everyone's been writing into us asking us what our thoughts on the results, at least their initial decision of the VIX lawsuit. Let's just a couple of them here. Let's get one from Pyon. Is probably. Let's just pick this one out of the hack. This is a good one here. He said this Pyon, or maybe Python, I think it looked like Pyon. They write, so the judge ruled that CBOE didn't manipulate their product, but they created a product that was susceptible to manipulation. Do you think this is the end of the lawsuit? So I'm going to answer that right now. Probably not, but let's keep on going. In some way, isn't that outcome even worse since they never fixed this thing until the lawyers came knocking? Just look at all the steps that Spikes takes. So there you go. What were you just outlining there, Simon? Just look at all the steps that Spikes takes to avoid these same type of problems. Is it out of the question to expect CBOE to have taken similar steps, or were they too afraid of hurting their golden goose product? Well, that of course is what he's referring to, listeners, is indeed the judge's decision on that lawsuit, which we all said on this show a year ago seemed kind of pretty close to outlandish. The notion that the CBOE, then Ed Tilly and those guys were down there in the basement of the CBOE laughing maniacally while they pulled levers to manipulate VIX. That's kind of what that lawsuit was alleging. It seemed like a pretty outlandish concept, and the judge kind of agreed with that. He said, that's kind of ridiculous. We're going to toss this out. He didn't toss it with prejudice. So he says they can bring lawsuits again if they change what they're going after. So they can't really go after, saying the exchange manipulated it. But the product, obviously, there were things going on in the product that raised a lot of questions. And so those things, I think, so to your question about, is this the end of the lawsuits? Probably not. They smell blood in the water. It was in places like the Journal, other things. We know lawyers, when they smell blood in the water, they're going to come back again. So we'll probably see some variation on this, but not to this ridiculous extreme of the crazy manipulation that they were alleging before. Is it out of the question to expect them to have taken similar steps? I don't know. Simon, you came up with these steps. Is it outlandish to think that someone else could have done something similar, or was maybe the VIX just too entrenched at the time to really make these kind of substantive changes?
Well, I think there's two aspects to this. One is, they invented it at the end of the day, and so they had to start from a clean sheet of paper. And so I guess whenever you do something like that, sometimes over time you find that you can refine things, right? That's just a natural process of evolution for anything, and that includes the VIX. So, with 15 years of hindsight, they probably look back and say, well, maybe we could have done something different. But Shelley can probably opine on this a little bit more, but there is one key takeaway here, and one of the key benefits, I suppose, that we lucked out on is that 16 options exchanges in the US trade SPY. Now, that's a huge differentiator. So let's just say there was someone who's a bad actor and is trying to manipulate the VIX settlement. You would use the far out of the money put because they have the most weighting for the index. So that's where you would go because the premium is small. You don't have to have too much ammunition relative to other parts of the distribution, but you can go in there and you might put a big bid in there. Well, to the external world, how do you know if that's real flow? People want to buy vol on the settlement on that morning because something's happening, or is it a bad actor that's trying to manipulate? And the issue that, the benefit, I suppose, that we have is that we have 16 exchanges looking at it. So if someone were to put something that was obscure and looked odd in the MIAX auction, then all the other exchanges would see that and say, wow, that thing is 7 cents bid on my market. It's 2 at 3 cents. And then we get the weight of the entire US market coming down onto our auction. So that's one thing that, is going to be, it's very difficult for CBOE to compete on that front because obviously it's a proprietary product. So that's the two-legged piece to it. Shelley, have I missed out on anything you think is worth mentioning here?
Yeah, there's two other key components to the spikes methodology that differentiate spikes from VIX at settlement. One of them is they both involve the truncation, but the truncation in which is the last option chosen to be used in the index settlement. CBOE goes on the first zero bid option. Our truncation is done at the second option that's worth a nickel or less. So if you have out of the money puts, say in SPX, a put that's worth a nickel, which in SPY would be worth half a penny because it's 1/10 the size. All you have to do is put nickel bid out there in that option in SPX, and it gets included in the auction. To take that option that's worth less than a penny in SPY and try to move it up to be 5 cents. You know how liquid SPY options are. How many tens or hundreds of thousands of options would one have to buy to move an option that's no bid at a penny to trade at a nickel? And as Simon says, the fact that our auctions are very transparent, they're open to everybody. All the major market makers and all 16 exchanges are members here as well. And if we have a large imbalance of 10, 20, 50, 100,000 to buy, and they're offered at a penny or even 2 pennies in all the other exchanges, you can be sure that we're going to see 2 penny offers come here on MIAX to sure that those things open cheap. They can't manipulate those options up to a nickel and get them included in the calculation.
That would be a Herculean feat, I think, to say the least. Mr. Meatball, any final thoughts on this before we go into the crystal ball?
I think that the exchange lawsuits, I think there's going to be lawsuits around this apocalypse for a while. I think there's a lot more culpability on the product creators than there is on the exchanges. So I think the exchange stuff, it hopefully is over because it was. I mean, Shelley is a competitor with CBOE, but I think everybody on this show can agree that lawsuit was baloney, and it's not good for anybody when lawyers are going after the exchanges. So now, what about could Credit Suisse or ProShares have some problems on their hands still? Yes. Should they? My opinion might be yes, but that's my opinion. So I think that's where you're going to continue to see a lot of action. Hopefully this garbage of going after CBOE or whoever is over. Yeah,
I'm surprised we haven't seen any action on the UVXY front and things like that. And a lot of people in our audience in particular got very outraged by that, right? So,
I know there's oral arguments going on with SPXY right now about whether so in front of the judge is the lawsuit to go after them, and right now they're arguing about whether the ProShares guys are trying to have the lawsuit dismissed. I am not so sure they will be successful.
Yeah, changing contract specs midday like that. That's kind of questionable.
Their argument is, look at our language. It says we can do whatever the hell we want.
We can slap you in the face, and no one can sue us about it.
Exactly. So I don't know that. I don't know that. That I think that kind of what they did is probably beyond that, but who knows? If the judge agrees with them, then that's, I think, bad for customers. So it'll be interesting to see where that goes, because if that goes to trial, they're going to lose.
Well, obvious caveat, listeners, none of us here are lawyers, so take our VIX legal hour with a grain of salt. But what we are VIX and spikes prognosticators. So let's keep on rolling right on into the crystal ball.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, everybody, welcome to the crystal ball. This is the portion of the show where some of us rise above the rest. to really show their forecasting par excellence here. I will say, at the beginning of the show, I was pretty much in that bullseye range. I was 0.03 off. As the show has progressed, as we've managed to talk down vol a little bit, we've seen spikes and VIX both come in. Both of them are hovering at around a 15 double right now, 15.55 or so at that level, pretty much for both. So I'm off by 0.2 of a point now. So I'm outside of my bullseye range by an extra 1/10 of a point. But still, I'll take it. Not bad. Otherwise, Mr. Meatball was not on the show last week. He was doing his show. So the ghost of the Meatball, he picked a 9.2. I thought that was kind of low. I thought that was kind of aggressive to the downside. But hey, that's what you get when you're not on the show.
Well, Mark, what you're missing was that right around 1:55 Central Time last week, I shouted really loudly. I shouted, and
1575
toward the Option Insider Network. I yelled 1550, hoping that you would hear that.
But it did not. Unfortunately, it did not make it all the way to the radio network. So that means, fun enough, I get to go first because even though I won, I will be a gentleman. I will not go first. Simon doesn't get to go on the show that often, so I will be nice. Simon, I will give you the pride of place. You get to choose. Do you want me to go first, or do you want to go first, sir?
Oh, definitely. You go first.
Okay.
Sure.
See, I didn't want to throw you into the hot seat. I didn't want to throw you into the hot seat if you weren't perhaps ready for it. It could be a dubious honor sometimes to go first. An honor, but a dubious one nonetheless. So coming at showtime, or end of show, I should say, listeners, we're at about a 15 double in spikes and VIX, or hovering there. We've been talking for a while about how kind of seemingly inexorably glued we are to around that 16 handle. Some of that coming off right now. Maybe this is the beginning of the trend to the downside. Will we see people writing in and listening live to the show saying they think VIX should be 20 or higher? Well, okay. You should prognosticate that. That could be your pick for the crystal ball. I'm just going to go out on a limb and say I'm not going over 20. I'll leave that to you. But I think we're going to move away from that 16 handle where we were for the last couple of weeks, coming into the downside. I don't see the great implosion yet, though. I'm not feeling it yet. So I'm going to come in a half a handle off where I was last week. I'm going to say 15.25 for spikes, and maybe or for VIX, and let's put it a little bit higher. For usually spikes a little bit higher, I'm going to say 15.40 for spikes. How's that sound? All right, Simon, you get to go next, sir. What are you feeling for this time next week?
Ooh, okay, so I agree with the general sentiment. I think we're going lower. I'm going to go 15.30 for spikes and 15.10 for VIX.
Wow. I should have let you go first, so I could come in and carp you, sir. What'd you say? 15,
That's
15, 15.30 and 15.10. Is that what you said? Oh, you're killing me here, Simon. Okay. You're off again for the next couple of months here. Coming in, just carping me left and right here. I get 1/10 of a handle of breathing room on both sides here. All right, there we go. Mr. Meatball, he didn't leave much room left for me anyway. Maybe you want to go lower. What do you feel next week, sir? Mr. Meatball, though, I think has the dog attacked you?
I'm gonna go no. I'm gonna go 14.5 for spikes and 14.35 for VIX.
14.35, 14.5. Interesting. At least you didn't cart me as aggressively as our former guest Simon, who magically won't be on again for a while. How does all that work? All right, listeners, that brings our joyous journey through the world of volatility to a close. Talked a lot of fun stuff. We talked size prints in spikes and in VIX. We talked open interest, answered a bunch of your questions about lawsuits, talked VXX, all this fun stuff, and we prognosticated for your enjoyment here at the end of the show. But before we go, let's go back around the horn and check in with everybody, see what they have coming up that may interest you. Let's start with your neck of the woods, Shelley. I got a feeling, like I said, this was hopefully the first of many. I got a feeling, given the interest we just saw anecdotally, people writing to us saying, did you see this spikes print? You see this spikes print? A lot of people were excited about this. So I'm getting the feeling there might be more in the hopper. Anything you want to tease us with this week, sir?
Again, there's been a lot of interest, a lot of institutional interest. We needed that one first big trade to break the ice, and I think we'll see more of these to come.
They are like lemmings, aren't they? Once you get that one in, bam, they all just kind of follow suit. It's like dominoes out there. You just got to knock that first one over, and that's exactly what we saw. So we'll see more. Hopefully we'll have more size trades to talk about in the near future. Simon, even though you cart me aggressively, I'll be the forgiving sort. I'll let you talk here. You talked your Bitcoin vol, you talked price dragging. Anything else you got in the hopper you want to share with our listeners, sir?
Oh, I think you've done a stellar job covering most of the stuff. Obviously the trade for us and MyX was hugely important this week, and we're excited about what it brings in the future. And look, we're just trying to get the rest of the pieces of the puzzle together so that to make it easier for clients to trade. So we're working furiously on that, and that's going to be the focus until we get it all done.
In the meantime, listeners, check out myaxoptions.com/spikes. Check it out. It's got the contract there. It's got the data. It's got the current prices. It's got a snazzy little video there as well to kind of explain all the spikes to you in a couple of minutes. It's got more information on you, Waterson, everybody else who wants to know about the price dragging, all that stuff. It's all, in there for your reference, myaxoptions.com/spikes. You can even get a cool little show there called Volatility Views while you're at it. So you do some fun listening while you're doing some fun reading and educating of yourself. And last but not least, speaking of education, Mr. Meatball, you guys just wrapped up your big educational pro trader summit. But if people are intrigued, they want to learn more, where should they go? What should they do? And what do you have up your sleeve for them next week?
If you check your mail, we just launched a new. I'm putting out a new ebook. We're working on our new website. So go to optionpit.com and read our blog and check out everything we write. And if you want to learn about volatility, there's only one place to go. optionpit.com.
I was joking with only really half joking with your partner there, the Rock Lops, earlier this week. We were talking boxes on our other show, the Option Block, and I thought boxes were the most boring thing on the planet, but people were writing in with questions about boxes. They were linking to deep, very controversial Reddit threads about boxes. Who knew boxes were the hot things? I think you guys might need to have an upcoming webinar about boxes. What do you think?
Well, I know that those a lot of people think that there's some sort of conspiracy. They're traded a lot in SPX for margin relief, is my understanding.
That's pretty much the use case.
There's a lot of there's a lot of crazy people that think there's some sort of crazy conspiracy.
But there's retail. There's retail trying to trade boxes now, which is crazy.
I don't know why a retail firm would trade a box.
And apparently someone lost a lot of money on one, which was kind of interesting stuff. So maybe boxes are the way to go. Either way, optionpit.com is the place to go, listeners. And on behalf of Shelly and Simon, do not predict vol before Simon. That's a good pro tip for you listeners. And Mr. Meatball, and indeed myself. I want to thank all of you out there for downloading and streaming and subscribing and for listening live and for sending in your questions. All the fun stuff that you do. Keep it coming. And we'll keep coming back at you with the show next week for more Volatility Views.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/The Options Insider, or via questions at theoptionsinsider.com.